Okay, guys, so I'm going to be looking at gold trade breakdown. So you can see this today is Friday, the 21st of July, right? Friday, 21st of July, and I was able to take this short trade on the last day of the week, right? And I'm going to do a breakdown, go over why I took this trade, the confluences, and all of that. But before then, we always have to start from the weekly time frame. You need to understand the narrative all the way from the weekly time frame down to down to the trade idea itself, right? Because despite the fact that these trades are taken on the lower time frame, or despite the fact that this trade was taken on the lower time frame, we always have a higher time frame narrative as to why we are doing or why I'm taking a selling trade. It's always from a higher time frame perspective. There's always a higher time frame narrative behind the trade ideas. So let's go to the weekly and then we'll break it down from the weekly to the daily to the 4 hour, the hourly, and eventually we'll get down to the 3 minutes where the trade was executed. So first thing, um, let me get rid of this. I don't know I have this. Okay, so this is what we are looking at on the weekly time frame. So in the last video I did, I talked about this breakout block on the weekly time frame, right? You can see I marked out the body and I marked out the wick of this candle, the body and the wick of this candle. So this is the close and this is the low of the candle. And I said we're going to get rejections either from the low of the candle or we'll get a rejection from the body of the candle. And you can see price, we had that rejection from the body of the candle, right? So this doesn't necessarily mean that price is bearish, right? This is just a reaction off of a weekly level, right? One thing about weekly levels is you can expect to get movements, you can expect to get counter trend moves off of these weekly levels, except like we just see price move aggressively through those levels. And in this case, that was not the case, obviously, right? So we obviously were able to get like that rejection off of that weekly level, which is fine. So dropping down to the daily time frame to have a closer look at what's going on, you can see you can see that price took out these equal highs, right? You can see how price took out these equal highs. And something you need to know also, I think I talked about this too in the previous video. So maybe for more understanding, you have to go watch that video. I will leave it in at the end of the end screen for this video. I'll put the video there so you can just watch the previous video to get a better understanding of what I'm saying. So I said this looks like a resistance level. Retail wants to go short. You can see price spiked above that. That's a liquidity grab, obviously. Stop. This is a raid on stops, buy stops, and then you can see the reversal to the downside. Now you can see the level we moved into, right? Again, just like how I marked it out on the higher time frame, the high of the candle, the body open of this candle as well, right? So the wick and the body, right? So that's where price tapped into. So this is a daily order block, right? And I'm looking to see if price would want to respect this. If this holds, then next week we could possibly see a continuation from this level. But if this level doesn't hold, right, then it could serve as resistance to take out these lows and maybe come back into this balanced price range, right? Or maybe even come lower for this order block, this bullish order block down here, right? So these are the two scenarios that could play out. But yes, so this was the target, right? Same price doing this reversal, this was obviously the daily PDRAs that we're looking for. So let's look at it this way. Let's take the low of this swing low to this swing high, right? You can see that this order block, right, and this fair value gap is all within the discount PDRA, right? So we had a fair value gap between this candle's low and this candle's high, or even this candle's high, right? So there was a fair value gap there. Price fill the fair value gap, discount. Any level below the 50% is a discount level, right? So that's what you just need to know. So this high, this candle's high, this candle's body are within that um, discount PDRA. So those were targets for the shorts. And this is how we build the idea little by little, little by little. So jumping down to the 4 hour, let's see. So this is the only trade I've executed this week. All right, this is actually the only trade I executed this week. So when all of this, I didn't take any sells on Monday. This was from Wednesday, right? So we had buys Monday all the way, right? And then from Wednesday, obviously we had the high of the week on Wednesday, and then now dropping down, right? So this is actually the only trade that I was able to take this week, right? Obviously, there were some setups that I saw on Monday and on Tuesday, but those were just observations. This is the only trade I've actually placed on the live account. So yeah, and now okay, so you can see what we have here. We have a simple. You can see how price ran out these highs here. Easy, all right. Ran out these highs, ran out these highs. Liquidity grab. All of this was a liquidity grab, and then price came back to the downside. So it looks bearish. Price is starting to look bearish, right? So that's what a lot of retail traders will see. So everybody potentially be waiting for a pullback so they can enter shorts, right? But what the market is going to do is basically pull back and then continue to rally. So that's what we're expecting next week. Let's drop down to the hourly time frame to look at. Let's break down the day, right? So we can see the opening price for the day, right? The opening price for the day was at 1970 300. All right, that was the opening price for today. We had a little spike above it, and then price just traded. So for the majority of this day, we traded below the opening price. So this was a bearish day, right? A bearish close. If you look at the daily candle, you can see that it's a bearish candle, right? Go back to the 1 hour. Back to the 1 hour. So this was a bearish candle. That's on the daily time frame. So let me take price. Let me use the replay tool, and let me take price back to our entry. And now let's look at the trade, right? So looking at this trade, let's drop down to the 15-minute time frame. Yes. So on the 15-minute, this was what we had. We had this fair value gap here, right? This 15-minute fair value gap. And when I saw this fair value gap, seeing price below this, let's look at the 5 minute, right? Let me show you something that we have on the 5 minute. So after this huge drop, after price drop all the way to the downside, we started to see this consolidation. And something we know about consolidation, right? This is just like the power of three. You always have the accumulation, the manipulation, and then the distribution, right? So whenever we have consolidation, usually when price runs out one side of the liquidity, it tends to seek the other side of the liquidity, right? So above these highs is buy side liquidity. Below the lows, sell side liquidity. So what did we see price do? Price went for the buy side. So what do we expect to see? Expect to see price go for the sell side. And same thing, if price runs out sell side, what do we expect to see? We expect to see price go for the buy side. So that's just very simple, right? Very simple. So price ran into the 15-minute fair value gap, right? 15-minute fair value gap here. What am I looking for? Now, I just don't execute on we don't execute randomly, right? So we also need to wait for price to align. And for me, my kill zone is from like 8:30 New York time, right? So that's like 1:30 p.m. Nigerian time. So that was the time I was waiting for. I was waiting to see if any setups were to form within that time period, it would probably be best for me to execute in line with that, right? So let me just play price forward and let's see what happens. So now let me go down to the 3 minute time frame. Now we can see that price made a run into that 15-minute fair value gap, right? We can see how price moved into that 15-minute fair value gap. Pretty nice, right? So what this is basically, let me drop down to the 1 minute and let's look at it on the 1 minute. So on the 1 minute time frame, this is what we consider a breaker, block, right? You can see the run to the upside, right? So this is like a Judas swing, right? Buyers are going to chase this, retailers are going to chase this as a buy trade, right? You can see how this bearish candle engulfs this bullish candle, right? And this is when I start to know, okay, we're basically going to break these lows and then we can see price trade lower. So very, very simple. Let me just play price forward. Eventually we get a breakout and now I'm just waiting for the retest. And let's see when we get the retest. This is 8:29, 8:30. Right on the dot, we get that retest, right? And something else you can see, we have, first of all, look at the confluences we have. We have this breakout block, right? Price breaks below it, retesting the breakout block. And then we have a second confluence. We have this fair value gap, right? We have a second fair value gap here, right? And this is how we frame our entry. This is how we frame my entry, right? We have the fair value gap and we have the breakout block. And you can see where I put my stops, right? I didn't put my stops above here because this fair value gap was, I didn't expect to see price run out this fair value gap. So I was confident enough to put my stops just above this high, right? And yeah, my first targets were these equal lows. So I put my first target at 1962, right? And that was for like a 2.5. Let me 1962. That was a 2.5 R, just below these equal lows, right? And you can see how price played out. Let's play price forward. Uh, so yeah, once price hit 1962, I collapsed my full position, right? So that was a 2.5. Eventually, price ran out these lows. And one thing about gold, and not just gold, all majority of all the currency pairs, whether it's forex, indices, whatever it is, they all love psychological levels. So I was expecting price to run into 1960, right? 1960 is just below this, and it's a psychological level, a clean psychological level. You have 1961, right, which is basically the lows of this, but we have 1960. So I knew price was going to run for 1960. So this was my initial target, 1960, but I collapsed my full position at 1962, just below this equal lows. So very simple trade, very straightforward, very clean setup, very clean entry. And this was the trade that I took for the week, right? So 2.5 hours, very, very simple, very, very clean. And that's just it. So I hope you guys find value. I'll leave the in the end screen, I'll leave the video, the previous video, so you can have a better understanding of my analysis. And then yeah, it's very, very simple. And that's just it. So I'll see you guys in the next one.